Hi, and welcome to another weekly recap. So, today I'm going to recap the third week of March, and it's from March 17 to March 21, out of which I was absent on March 19 because of some personal reasons. But apart from that, I didn't get any trades on March 19 also. I analyzed it at the end of the day after I was back on my desk. I didn't get any trades. I analyzed it. So there was no missed trades on these days, as well as there is no trades at all on this week. So next week is going to be very interesting. So for that, we must know what happened on this week. So let's jump into the whiteboard and see what happened on this week. So starting off with the March 17 and on the daily chart. So the daily swing structure is bullish, and you can see that the demand is getting weakened, and all these forms kind of sell liquidity here, so which can be easily targeted. So this is kind of a sell liquidity, which I am expecting the price to take, and then this is the uh, EQ. So I'm not expecting the price to come down all the way to the EQ and then push up. So what I can expect is at least I can expect some sell liquidity shape. So this could be the valid demand zone where the next higher low can be formed. So at least I can play the pullback till this demand zone. So if this may take a couple of days, sometimes a couple of weeks, depending upon how complex the pullback is. So I can play that complex pullback. But for now, this is start of the week. So this demand is still in control. So I'm just gonna look for longs from this demand, playing this uh, as long as the daily is bullish, I'll be looking to play longs. But once the daily shifts bearish, then I'll change the bias and start to look for sells. So that's the idea, total idea. So this is the 4 hour chart. Let me. This is the 4 hour chart, and you can see the pullbacks in depth in the 4 hour chart. And here you can see I am looking to follow the uh, bullish order flow. Here you can see the internal structure is being bullish everywhere. So what I can expect is price to liquidate some sell side liquidity. And if the price chalks bearish, then this would create a beautiful demand from which I can look for buys and target this week. So that was the intention. It's very clear. So coming to the H1. Same. The H1, the swing structure is bullish, so this becomes a strong low, and the strong low got liquidated, which means all you must see is wait for the price to chop bullish. So if the price, was bullish, I was internally was bullish, then this would become a valid demand zone. So I can look for longs from here, and then boom, take out this weak high. So the 4 hour and the H1 is in align with each other. So what about the daily? From the daily perspective, we are not having any clear information. So I'm going to stick with the 4 hour as well as the H1 bias. So as expected, price liquidated the lows and then made a strong internal boss bullish. But the only caveat is it left some sell side liquidity below, and this could be a valid demand zone which has the inducements above. So it's kind of complicated. Price can fail this demand zone and then get into this demand and then push the price further up. It's a bit complicated, but for now, since prices went all the way up, so I can expect the price to respect this demand zone and then push the price up. So that's why we are having M15 to confirm the entry. So I'm not directly placing my limit order here. I just wait for the M15 and then look for longs. And price now came back and price took out the highs. So this is what happened on this day. So this could have been a beautiful trade, but it didn't happen. If there was sufficient pullback or if the displacement was small and pullback and then went up, so that would have been a beautiful trade targeting the weak high. But since there is no pullback, I was not able to capitalize on this move. So yeah, I'll pass this trade, and there are so many opportunities waiting ahead. So it's not to worry about this trade. So moving on into the next day, March 18th, there is still no update from the daily. It's still kind of consolidating and slowly moving up, and we can see the demand getting weakened. That's a good sign. And moving into the 4-hour chart, the same thing. 4-hour yesterday made a boss bullish. So now I can look to play the internal pullback of the 4-hour chart. Why internal pullback? Because after the price was bullish, no, yeah, yeah, I'll tell you why. Because there is nothing to the left from which the price can react from. And this is the only demand zone which I'm expecting. Price can validate this one or it can invalidate this and boss bearish, internally boss bearish to facilitate the swing pullback. So anything could happen at this point. So until then, I can look for shorts. That's the clear move. And this short is not only expecting the price to mitigate this demand. This shorts, I mean, I'm looking for sales, expecting 4-hour to internally boss bearish as well as the daily to chalk bearish to facilitate the daily swing pullback. So there are so much of things going on. So from the H1 perspective, it did not um, you know um, go as per the plan. So what I expected is to price to mitigate this 4-hour demand zone. For that, this was the uh, even if price made the swing pullback, I did not expect the price to actually take out the 4-hour demand zone. But apart from that, I was expecting the price to take out the internal resistance liquidity. So this was a beautiful internal resistance liquidity which I expected the price to take before pushing the price further up. So since the price actually chalk bearish here, so I expected this chalk bearish to continue and then take out some internal resistance liquidity. If the price mitigates this demand or not, that's a second. Even if the price mitigates this demand, I'll not be looking to trade directly. I'll wait for H1 to chalk bullish and then look for longs. But if the price takes out this internal resistance liquidity also, I'll be looking for longs and then I can mean, wait for the price to chop bullish and then I look for longs. So yeah, that's what the plan. But price took out the Asian lows and chop bullish. But I'll consider this only as the internal boss bullish. So at 11:49, price came down and mitigated this demand zone. So there are three reasons why this demand zone is not valid because it did the price action did not sweep the internal range liquidity. That's the first point. And this POI is still in the premium. And third is from the 4-hour perspective, this low can act as an internal range liquidity. So, and then the price can push further up. So there are multiple reasons for this POI to fail. But there are some reasons for the POI to validate. So what are they? First one is it's web liquidity and it has got some a ton of displacement. And this liquidity is not ordinary liquidity. This is actually the Asian lows. And I can expect the internal structure of this H1 to hold and push the price up. And some kind of complex pullback can be organized, and then price can take everything. A kind of trend line liquidity can be formed, and the price can push down. So from that perspective, this demand can hold. And if I zoom in to the M15, it would be much more clear why I'm expecting this demand to hold because it is having the equal highs. So, price can push up to take out this equal high, so which is what I meant. Price can push up and form this trend line liquidity. So only if there is liquidity, price will move up and down. So here we can see that there is relative highs that which can act as an liquidity for the price, which can act as a magnet for the price. But as soon as the New York started, price uh, invalidated this POI without any, it did not even give a reaction. It just rallied down and it took the internal range liquidity. So if the price mitigates this 4-hour demand zone, will I look for longs directly? Definitely not, because this POI was formed long back ago. So I'll wait for the price to actually chalk bullish first. So this would give me a confirmation that the price can push further up. So from the freshly formed demand, I can look for M50 confirmation and then longs, targeting the weak swing high. We can see that this has a weak swing high, but that never happened. So I'll pause the March 18, and March 19 I was absent, but nothing happened on this day. It was a bit consolidative day. So let's look at what happened on March 19. On March 19, from the daily perspective, it's still the same. Price was the demand is getting weakening, and the price is still in the consolidative mode, and it is in the range. So from the 4-hour perspective, the H4 has internally was bullish, and it has formed a kind of inducement for this demand. So this is a high probability POI because it got an inducement, and it also strong displacement is also there. So will I look for longs directly from this PO? Definitely not. I'll wait for the H1 to chalk bullish, and then I'll look for longs. So that's the plan actually for this day. So that could have been the plan for me if I was present on this day. But what happened? Price, pushed down with force, and it formed a range. So what happened again? Again, a beautiful this becomes the second displacement for this PY. So March 20 would be more interesting because of these inducements and this strong demand zone. So the H1 can push the price down, and then if I get confirmation, then I'll be I'll aggressively looking for buys, targeting the buy side liquidity, or you can see the H1 swing high, whichever is apt for you. So moving on to March 20, the most interesting day. From the daily perspective, nothing has changed. It's still in the range, and it's still consolidating, and it's building sell side liquidity. So from the 4-hour perspective, yesterday we saw that the price was here, but now the price pushed up. Will what's the mechanics behind the market is it's engineering liquidity. So with this trade push up, any novice trader will think that the demand is still in control and the price is going to push up. So this is where the novice traders put their stop losses, and that's where the sell side liquidity exist, and that's what we are expecting the price to take and chalk bullish for me to look for longs. So it's as simple as that. It's not a blunder. You can see um, this actually acts as a resistance level. So that's what novice eyes will see. And from the uh, market makeup point of view, so this becomes the sell side liquidity. So yeah. So the now there is I can also, since there is a ton of sell side liquidity, so I can expect the price to come down today. So I don't want to miss this move, this bearish move. So I can look for from the H1 perspective, if I get a good supply from which I can look for shorts, I'll definitely be aggressive and look for shorts from that supply. So both longs as well as shorts are there to be taken today. So from the H1 perspective, you can see price had chalked bearish. H1 actually was bullish and price had chalked bearish. So this is the POI which I expected the price to take, and here is the inducement. So perfect. So I look for long in shorts from the supply. So if the price reaches here and if the price chalks bullish, I'll be again looking for longs. So today I thought today was my day. So everything was set up perfectly. So all I must do is wait for the price to show itself. So did that happen? You ask me, no, because price never pulled back, gave me any entry here. It just rallied down and it took out the sell side liquidity below and H1 boss bearish. So actually there was room for me to play um, shorts again. So from this POI, so the price actually slightly pulled back and then pushed down, but I was not interested in this trade because H1 swing low got liquidated and price failed to close below. So if this was actually closed below, then I would have looked. That would have been interesting. Then I would have marked this PY and looked for shorts. But since the price just liquidated it, and you can see the rejections coming off, what could be the expectation? The strong low got liquidated, and obviously, which means that the price can push up to take out the weak swing high. So that was my expectation later in the day. But actually, this POI got respected, and after some consolidative move, the price started to push down. So I'll show you the M15 why I didn't take. So this was that liquidity candle. So this is the leg inducement, and this leg inducement got taken out, and this is the liquidity candle. So this is actually 27 pips. So this is out of my know range. So I didn't take this trade. I just passed it out. So what seemed to be a promising day of both longs and shorts resulted in no trades day. So this is what happens many times. So I think is consistency is the key. So sometimes market gives you the opportunity and also gives you the entry models. So that's where our hands rise up. But other times, we know that the market is going to go in this particular direction, but still we'll be helpless without our entry models. So just keep doing the same thing. So one day the entry models will play out and you will get the trade more often. So yeah, there should not be any room for FOMO or FOL. So coming on to the last day of this week, so price kind of became bearish and this PY almost got failed. So what I expected is anticipated is price did not take any sell side liquidity, so I expected this internal range liquidity to be taken out, and then if the price wants to continue building sell side liquidity, it can push up. If the price wants to push down and start start the swing pullback, then this low will be taken out. So two things can happen on this day, but for now this low is my target. So that's what I am expected the market to take it down today on this day. So this is that internal range liquidity which I marked from the daily perspective, and the H4 internally was bullish. And again you can see in from the H4 perspective, this high is not yet it, this high was not taken out. It is just wicked. You can see there is only wicks, and this is kind of an evening star move. So price push up, uh, evening star move, and then the price push down. So which can and also this is the first confirmation, and the second confirmation is this demand failed. So there is no other demand for the price to hold. So obviously this internal range liquidity would be taken out. So these are the two confluences for me to look for sales targeting the internal range liquidity. So here you go. Price push down, and here you can see the price actually chalk bearish. This is the chalk and this is the POI. So if the price pulls back here, I can look for M15 entry models and then target the internal range liquidity. It's as simple as that. So did that happen? A kind of, price chalk bearish actually and pull back, but I did not get it. I did not get any entry models here. I'll tell you. So this is where the price push down. So this is the pullback. So there are two types of entry models that I expect to play out. One is the LC model. So there is no lid here. So I can't take trades using the LC one. So I expected the LC to play out, which means the price to give a fake break liquidation, and then I can place a stop order below, and that also did not happen. And the third entry model is confirmation entry, like price pushed up, mitigated this POI, and confirmation entry. So this was the another thing that I was expecting the price to play out, but I think played out. So it actually built up some liquidity here. So at least if this liquidity was taken out, I would have taken shorts, but nothing happened. Price actually took out the internal range liquidity, but it did not give me an entry model. So again, so this is kind of week where my analysis played out quite nicely. But the thing here is I was not the entry models did not play out, so I was not able to capitalize on big moves. So yeah, um, so what I can expect the next week, coming week is so from the daily perspective, the price had clearly chalk bearish. So I can expect this move to continue until at least it reaches this demand zone. So yeah, suppose if the price somewhere or in between the middle, if the price forms kind of, you know, something like this, then I'll be looking for longs. But apart from that, I'll be expecting the price to mitigate this daily demand zone. And by the way, this is 4 hour chart. So yeah, a big week is going to come up. So shorts would be, looking for sales would be the go-to point the next week. And if I am having a strong highs and clear supplies, I'll be looking for sales and targeting the daily demand zone. Yeah, let's see what will happen on next week. So until then, cheers, guys. Bye.